This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Stocks retreat. The Dow and the S&P 500 post their biggest drops of the year, and it comes ahead of a critical two-day Fed meeting.
Coffee and soda. Keurig is buying Dr. Pepper Snapple. Executives say it could reshape the beverage industry, but Wall Street isn't so sure.
Ready, set, file. The IRS is now accepting returns, but there are some key questions to ask before you hire a tax preparer. Those stories and more tonight on Nightly Business Report from Monday, January 29th.
Good evening, everyone, and welcome. You know, investors just aren't used to big drops these days, but today they got one. The Dow suffered its biggest decline in nearly 5 months, and it comes at the start of a jam-packed week filled with earnings, the State of the Union address, and the big jobs report end of the week. But what got investors nervous today was a rise in bond yields, with the 10-year yield hitting its highest level in nearly 4 years, just one day before the start of a Fed meeting. The Dow Jones Industrial Average dropped 177 points to 26,439. NASDAQ was off 39, and the S&P 500 fell 19. Bob Bazzani takes a look at this big week ahead.
Stocks took a breather today, but there will be no shortage of market-moving events to watch this week. We're more than a quarter of the way through earnings season, and this will be the busiest week yet. On the surface, this news could not be better. Earnings are growing faster than anyone had anticipated, and that's the best news you can get. So far, roughly 80% of companies reporting are beating earnings estimates in the fourth quarter. Now, that is way above historic trends. It normally would be closer to 60% beating, so we're 20% above the normal numbers. But traders have been getting nervous as 10-year Treasury yields have passed 2.7%. That's the highest in 4 years. Rates moved up 5 basis points over the weekend on not much news. The market has shown it does not react positively if rates move too quickly. Now, the single biggest market-moving news this week, therefore, may come from the Federal Reserve meeting. That's on Wednesday, and that's when they're going to talk about rates, potentially. Traders are anticipating 3 rate hikes this year, but with stronger economic growth and some wage inflation expected, many believe that we could be in for 4 hikes or more, and the markets may have a problem with that. Finally, President Donald Trump will deliver his State of the Union address tomorrow, which could move infrastructure stocks and the dollar. For Nightly Business Report, I'm Bob Bassani at the New York Stock Exchange.
As Bob just told us, this week is packed with several potential market-moving events. So what is the market most worried about? And as an investor, how can you protect your portfolio? Joining us to talk about all of that is Jim Paulsen, Chief Investment Strategist at the Leuthold Group. Good to see you, Jim. Welcome.
Thanks, Sue.
Let me start, first of all, with the rise in interest rates. How significant is it going to be for the market going forward?
I think it's very significant, Sue. I think the market's got their eyes on that quite a bit. And the real issue here is going to be, I believe, do we get an inflation number at some point that scares the bond market even further and sending that 10-year up towards 3%? I think if it's back, not just the bond market moving for no reason, but if it gets some reliable data that shows inflation is actually picking up, moving bond yields even higher, I think that'll bring even more pressure to bear on the stock market.
Is there a risk that the things that we got so excited about last year, rising corporate profits and a strengthening economy, that they lose their potency to surprise positively?
I think so, Tyler. I mean, a year ago, no one realized, we were thinking we were growing around 2%. We didn't realize we were growing at 3%. No one realized we were in a synchronized global recovery where all economies were going to pick up. Now we've kind of caught up to this. We know the economy here is doing well, that earnings are doing fantastically, that not only is the U.S. doing well, but all over the globe they're doing good. And it might stay good this year. I think it's going to. Both earnings and the economy stay pretty good. It just will no longer surprise because we realize now that everything's as good as reported. And if it doesn't surprise, it won't impress. And if it doesn't impress, it won't keep lifting the value of the stock market like it has over the last year.
So you've worked up a couple points on what an investor should do now. And you say reduce the bond-like or yield-sensitive stocks, correct?
Yeah, that's one thing I would do. I still think yields are going to move higher. I think the Fed is going to continue to raise rates this year, and I kind of think the 10-year yield is going to go above 3%. So I would make sure I'm not holding a lot of stocks that perform badly in rising yield environments, and that'd be like the utilities and telecoms, consumer staples, dividend aristocrats, those types of areas of the stock market, which might continue to underperform.
And if you're going to add to equities, you say maybe look overseas, not in the U.S. Quick answer, Jim, please.
Yeah, I would look abroad. I simply believe they have better values abroad. They're earlier in their recoveries. They're probably not as sensitive to rising yields as is the U.S. market. And I just think they'll hold up better if there is a correction here in the United States.
Good advice as always, Jim. Thanks so much. Jim Paulsen with the Luthold Group.
And to the economy now, where Americans are splurging. Consumer spending rose solidly in December thanks to a rising stock market and improving job prospects, including marginally better incomes. But all that spending meant people saved less, a lot less. The household savings rate dropped last month to its lowest level in more than 10 years.
Some progress is being made in the NAFTA negotiations, but the U.S. Trade Representative Robert Lighthizer was clear that he wants to see more movement, and he said as much at the end of the 6th round of talks to rework that now 30-year-old trade agreement.
I am hopeful progress will accelerate soon. We will work very hard between now and the beginning of the next round, and we hope for major breakthroughs during that period.
The next round will take place in Mexico in late February.
Well, as Bob Pisani mentioned just a moment or so ago, infrastructure could be a big topic in tomorrow night's State of the Union speech. One day before the address, there are reports the Trump administration is exploring the idea of nationalizing a next-generation wireless network. The 5G network would reportedly counter the threat of spying by foreign countries. The FCC and the communications industry push back against the idea. Shares of the major wireless providers, which are looking forward to 5G, pulled back in trading today.
Coffee and 7-Up kind of seems like an odd match, but K-Cup maker Keurig thinks buying Dr. Pepper Snapple is the right move. Shares of Dr. Pepper Snapple soared in trading today as company executives say the multi-billion-dollar deal could reshape the beverage business. But as Leslie Picker reports, Wall Street is skeptical.
It's a deal that combines familiar names like Dr. Pepper, 7-Up, Snapple, Sunkist, and Green Mountain Coffee. Today, Dr. Pepper, Snapple, and Keurig Green Mountain revealed that they are merging into a beverage behemoth, offering drinks hot to cold. Bob Gamcourt, the CEO of Keurig Green Mountain, explained why.
It's not intuitive at first, but as people learn about it, they're going to realize that this makes total sense. When we put these two beverage companies together, we create a North American beverage company of scale, $11 billion in revenue. We cover all consumer need states. We get exposure to high growth areas. And really importantly, we've got a distribution system that can get those brands to customers anywhere they shop.
But analysts were a bit more skeptical. One wrote in a note today about how many are struggling to understand the strategic rationale of this business combination, adding that a grand plan should become clear over time. To some analysts, that means bulking up through even more acquisitions in the future, radically transforming the beverages industry and fending off smaller competitors. For the executives who signed the deal, it's all about reaching the consumer wherever they shop.
If you think about how beverage brands are born, they're born in small outlets, vending convenience, where people buy them one bottle at a time. That's hard to do. You need a very, very sophisticated distribution system. That's exactly what DPS has. So we're able to match that with our strength, which is in traditional grocery.
Keurig is owned by a private investment company called JAB, which also owns a variety of other coffee companies like Peet's, Stumptown, and breakfast spots like Panera Bread. The company also partners with others like Illy and Folgers, amplifying the impact of the deal. Shares of Dr. Pepper Snapple skyrocketed today after the deal was announced. Shareholders will get almost $104 per share in cash and will still keep a stake in the combined company, which will be traded publicly. The deal is expected to close next quarter, continuing the company's quest to quench thirsts and caffeinate consumers all over the world. For Nightly Business Report, I'm Leslie Picker.
All right, time to take a look at some of today's upgrades and downgrades. Wells Fargo cut its rating on CBS to market perform from outperform. The analyst there says he just doesn't like the talk of CBS and Viacom merging and that it could harm long-term valuations. Though neither company has commented on the reports of a combination, the firm did reduce its price target to $63 from $70. Shares of CBS off 2% today. Starbucks also downgraded. Bernstein is cutting its rating on the company to market perform from outperform, or half calf from espresso. The firm says growth in China is not enough to offset slowing U.S. sales. The price target cut to $64 from $67. The stock fell more than 1.5%.
Allergan was upgraded by Barclays. That firm increased its rating on the stock to overweight from equal weight. The analyst cites strength in its Botox business and says the stock is undervalued at current levels. The price target lifted to $230 from $220. The stock was up fractionally today to $187 a share. UBS downgraded Wynn Resorts to neutral from buy. And of course, this follows the report Friday of allegations of sexual misconduct against company founder and CEO Steve Wynn. The analyst cites increased risk to its outlook and the rising scrutiny of regulatory agencies. Shares of Wynn fell 9% in trading today.
Well, that decline in Wynn shares today follows a 10% drop on Friday when that news broke about Wynn's alleged sexual misconduct. Wynn denies the allegations but resigned from his position as finance chair of the Republican National Committee over the weekend. Contessa Brewer has more.
The pressure is mounting on Steve Wynn, although he calls the allegations against him preposterous. But investors are wondering whether there will be real implications for projects under construction in Boston and Las Vegas, and whether gambling licenses there and in Macau, where the company earned some 70% of its revenue, could be in jeopardy. Gambling is a tightly regulated industry, and Massachusetts and Nevada are taking a hard look at the gaming licenses that Wynn holds. Macau's gaming regulator tells us it's also concerned about appropriate qualifications of the major shareholders, directors, and key employees holding important positions in casinos. It's the first time the CEO of a major publicly held company has become the center of such controversy in this Me Too movement. And Steve Wynn isn't simply the CEO, he's regarded as the emperor, involved in even the smallest of design details of his developments. The corporate board of Wynn Resorts is largely seen as toothless, last year receiving the worst ranking by Institutional Shareholder Services for governance risk. Well, now multiple law firms are launching investigations into whether the board of directors failed in its fiduciary duty to the company.
If you're the board, you want to get the stock back up, you want to save the company, and you want to make sure you don't get sued for knowing about something that you didn't act on.
The corporate board of Wynn Resorts tapped the only woman director, Patricia Mulroy, to lead its own investigation. But there are serious questions about what the board knew. Steve Wynn publicly blames his ex-wife for instigating these allegations. And the company also put out a statement questioning the motives of Elaine Wynn. Quote, "It's noteworthy that although Ms. Wynn says she knew about the 2005 allegations involving Mr. Wynn in 2009, she never made them known to the board of directors, of which she was then a member. And she did not raise them until after Mr. Wynn remarried, and the shareholders of Wynn Resorts voted not to elect her to the board."
This is a new front in the ongoing sexual harassment moment we're living in, and I think now there's going to be a lot of interesting meetings that are going on in boards.
Women's groups are already calling for Steve Wynn to be fired.
Nobody cares about due process. They care about seeing a head roll.
Though he created the brand and his personal signature is the stamp on the glamorous resorts, the speculation has already begun about what a win without Wynn would look like. Contessa Brewer, Nightly Business Report.
Still ahead, social media under scrutiny. This time it is Twitter, fake followers, and questions about its business.
Dell might sell itself, but not in the usual way. According to CNBC, the company, which went private in 2013, is reportedly weighing a sale of its business to VMware. Now, Dell owns about 80% of VMware. It acquired that stake in the company when it purchased EMC for $67 billion a few years ago. The acquisition of EMC stands as the largest tech deal ever. So, a reverse merger with VMware would theoretically be even bigger. And it would allow Dell to become a publicly traded company again without going through all the traditional offering processes. Shares of VMware fell 16% on that report.
Facebook is rolling out a new privacy initiative. Users starting to see notifications in their news feeds to perform a privacy checkup. The company is likely trying to stay one step ahead of EU regulations that will restrict how tech companies collect, store, and use your personal data. If companies breach the new rules over there, they would be subject to fines of up to 4% of their global annual revenue. That's a big number.
It is. As Facebook tries to get control of privacy issues, Twitter has its own problem: fake accounts, and lots of them. It is the latest black eye for a company that's come under increased scrutiny from users and investors. Julia Borston explains.
Twitter has drawn criticism for a range of issues, enabling Russian manipulation of the election, for trolling on the platform, for lack of user growth, and now for supporting an ecosystem of bots, or fake social media accounts, some based on stolen identities. The New York Times detailing how fake followers have been purchased by celebrities, athletes, and politicians, from Kathy Ireland to Ray Lewis, even a Twitter board member. The sketchy company behind those fake followers, Devumi. It sells bots to some 200,000 customers, according to the New York Times.
This has to come off their platforms. This is not a way to do business, and I think Twitter knows this. So do the rest of them. I mean, these, as I've said before, it becomes a cesspool of marketing, of malevolence, of all kinds of things. And, you know, it just doesn't help their business.
Twitter, with 330 million users, has long drawn criticism about its slow growth. Last quarter announcing it had been overestimating monthly users by up to 2 million for 3 years. As for bots' impact, Twitter estimates that no more than 5% of its users are false or spam accounts. Last year, a study from USC suggested up to 15% of its users could be bots. The company tweeting, quote, "The tactics used by Devumi on our platform and others as described by today's New York Times article violate our policies and are unacceptable to us. We are working to stop them and any companies like them." This expose prompting New York Attorney General Eric Schneiderman to launch a probe into Devumi and its business practices.
It's not just Twitter, it's the entire ecosystem of these communications companies, these social media platforms. And at some point, they're going to get regulated or people just are going to stop using them.
Even Mark Cuban, with nearly 8 million followers, weighing in, tweeting it's time for Twitter to confirm a real name and a real person behind every account, and for Facebook to get far more stringent on the same. "I don't care what the username is, but there needs to be a single human behind every individual account." With Twitter earnings coming up next Thursday, CEO Jack Dorsey will be in the hot seat. For Nightly Business Report, I'm Julia Borston in Los Angeles.
The chipmaker Maxim Integrated reportedly in merger talks now, and that is where we begin tonight's market focus. CNBC says that a Japanese tech company is in discussions with Maxim about a potential deal. Could be worth as much as $20 billion. Shares of Maxim Integrated up 12% on this down day, finishing at 66.27. Lockheed Martin reported stronger than expected earnings and sales in the latest quarter as it sold more F-35 fighter jets. The world's largest defense contractor also said the new tax law is going to help this year's profits and expectations. Shares up nearly 2% to $351.42.
The packaging company WestRock is buying Capstone Paper and Packaging for $3.5 billion in a deal that will expand WestRock's portfolio and its U.S. presence. The merger has an enterprise value of about $5 billion. Capstone Paper shares jumped 30% to $34.71. Meanwhile, shares of WestRock were down 2% to $68.41. And after the bell, MetLife said it was postponing the release of its fourth quarter earnings report from this Wednesday until mid-February. The insurer said that delay was due to an accounting issue in its group annuity business. It now expects to report results well below Wall Street estimates. Shares of MetLife initially fell in after-hours trading, also ended the day down a fraction to $54.40.
Today, this will put a smile on your face, marks the start of tax season, with the IRS beginning to accept returns, the most wonderful time of the year. That means now is the time to think about hiring a pro if you need help, and just know that not all tax preparers are created equal. Sharon Epperson joins us now with how to find the right person. So let's start with what questions to ask, and I assume the first one is not how big a refund can you get me?
No, that's probably what you really want to know. But the question to ask the tax preparer first is, what is your PTIN? That stands for Preparer Tax Identification Number. And if they're going to sign your return, they have to have that number. And you may wonder what your tax preparer's number has been. That's what that's for. The other thing you want to ask is about their credentials. And they could be an enrolled agent, an EA, or they could be a CPA, a certified public accountant. And understand that there is some difference in terms of the education they've had to have. And the IRS actually designates the EA, the CPA, you have to sit for an exam. And it is a wider scope of knowledge about things other than taxes as well. And then the last thing you need to ask is, are you going to be here all year? Because with the tax changes, there's so many things that may come up that you want to know about, and you probably need to do some year-end tax planning this year, even if you've never done it before, because of these changes.
It's also the time where scammers know that you're going to be filing a return, and they try and front-run that. What can you do about that, if anything at all?
One of the biggest things that they may say to you is, we're going to get you a bigger refund than anyone else. That's a claim you don't want to hear, and you should be really considering that a red flag. If they are trying to tie their fee to the percentage of your refund, that's another red flag. And then maybe the statement, well, just put your refund in my account and that'll cover your expenses, the fee that I'm going to charge you. Use that to cover. That's something you don't want to do.
And quickly, are there places I can go for free advice or help?
Go to irs.gov, look at Free File, and see if you're able to do that for free if you qualify by income. Their Free File program is an excellent way to go. The other thing is to look at some tax assistant programs that they have, the volunteer program, the VITA program. You can also find out about that, VITA, on their website. And AARP also has a tax prep service that they offer to the elderly.
I'm just going to take you with me. That's what I'm going to do. I'm taking Sharon with me.
All right. Sharon, thanks so much.
My pleasure. My pleasure.
Coming up, why it's buyer beware for those investing in cryptocurrencies. There is a new type of malware creeping into computers. Hackers are gaining access to PCs through advertisements. The hacker can then use your PC's computing power to mine cryptocurrencies. Last week, users were noticing that YouTube ads were triggering their antivirus software. YouTube said this relatively new form of abuse violates its policies and that it is monitoring that activity.
The cryptocurrency industry is like the Wild West for criminals these days, and unlike with traditional investments, regulations are lax. Andrea Dre on what you need to know if you already own cryptocurrencies or are considering investing in them.
Hundreds of millions just disappearing with no traceability whatsoever.
Welcome to the crypto heist. No guns required.
With digital coins, there is no regulator, there is no insurance. It is buyer beware.
We sat down with two cybersecurity experts, Raj Goel and James Line, to get their advice on protecting your virtual currency.
It is important to consider your electronic wallet with the same paranoia you would your physical wallet.
So how does today's Sundance kid grab your wallet?
For most consumers, it's going to be a risk that comes in through their browser.
I've seen a load of examples of malicious code that now goes and tries to scan your computer, scan your website for poorly secured wallets.
And surfing the web isn't the only way you can expose your cash. Last month, some mobile apps were found that could steal your wallet instead of securing it.
People leaving their wallet lying around for collection by malicious code.
And the experts say even some major cryptocurrency heists have come down to some very basic security flaws.
So we're not talking about hugely complex, big, scary mathematical issues. We're not paying attention to the details.
So what can you do?
You want to invest in making sure you have strong passwords.
And Line says using an offline wallet system rather than having it run on a third-party exchange is also key.
You wouldn't leave 10 million in diamonds sitting in your bedroom door letting the world know. Why would you leave 10 million in Bitcoin sitting on your computer? which the world already knows about.
With thousands of coins out right now and new ones being created every day, experts say jumping on the ICO or initial coin offering can put you at risk.
You don't really know if it's a real coin offering, whether it's a fraudulent coin offering, and they're stealing your money because they can.
Late last year, the SEC halting a $15 million ICO that falsely promised a 13-fold profit in just 1 month, a historic move for the agency.
To me, all these digital coins are very much like the stock market or the dot-com bubble in the late 90s. It's a gamble right now.
And even if you don't invest, cybercriminals can target your computer to mine for coins. Instead of digging for gold, digital coins are mined by solving complex math problems. By taking over computers across the globe, criminals can grab massive amounts of power and mine away, free of charge.
Is there a way to tell if your computer's being used to mine?
Yeah, if you look at your computer's CPU meter and you're not doing anything and the CPU is spiking or staying high long periods of time, then either you've got a miner in the background or something else.
And when it comes to protecting your wallet, experts say make sure you're running the most up-to-date security software that's out there. And we can't stress this next one enough, but create a tough password and make sure you change it often. For Nightly Business Report, I'm Andrea Day.
And that will do it for us tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Matheson. Have a great evening, everybody, and we hope to see you back here tomorrow night.